profit and loss statement is the most familiar statement to operational managers. The profit and loss statement is also known as the performance statement since it shows the business results of the hotel. The profit and loss statement is mainly divided into three sections. Revenues are the starting point of any business. Revenues are also known as the top line. In most cases, they refer to the gross operating revenues or gross revenues. Revenues are also considered an index of performance. If somebody were to ask you what is the performance of your hotel, they probably are referring to your revenues. Revenues are also contributed by price and quantity. Quantity means business volume and price means an average rate. We will see more of these two concepts in late modules. Finally, all revenues have to be realized in cash, so revenues are related to cash inflow. The key concept to remember here is the contribution by price and quantity. The second section is the section on expenses. Expenses are literally the cost of doing business. Without incurring expenses, you cannot earn revenues. Expenses are also considered an index of effectiveness because however high revenues you earn, your profits will be dependent on how well you manage your expenses. Expenses are also contributed by price and quantity just like revenues. And finally, expenses mean cash outflow. Every expense ultimately has to be paid out. The key concept to remember here again is the price and quantity contribution. The final section of the profit and loss statement, and probably the most important one, is the one on profits. Profits are known as the bottom line. If revenues are the top line, then profits are the bottom line. But a bottom line may mean different things. It could mean gross operating profit, it could mean net operating profit. We will see as we go along in the course. Profits are considered an index of retention. Revenues are considered index of performance, expenses as an index of effectiveness, and profits are what you ultimately retain or keep. Profits are also contributed by price and quantity, just like revenues and expenses. And finally, profits mean cash inflow. The key concept to remember here again is the price and quantity contribution. These are the three main sections of the profit and loss statement, a very key financial statement for operational managers.